All right, this is your market recap for November 7th, 2025. As you can see today, we had actually a pretty big sell side move coming down here below this Wednesday, October 22nd low, and then coming up off of that to reach that 20 and 30% TGIF retrace. Now, you'll see when we get down to the lower time frames that there really wasn't much to take a trade off of. Um, and I'll give the reasons for that. So with that, we'll get down to the 4 hour. We can see here. Um, Today's candle really just wait, where is it? Thursday 6 p.m. here. We opened, consolidated, and then took off to the downside, targeting this sell side liquidity. Once we hit it, we came up. Other than that, no retraces, no nothing we could really use to play on it. And in my opinion, not really a reason to draw down here. But we did, right? We were at equilibrium of this move up here. Fine with that. But price wanted lower, so it went lower. On the 1 hour time frame, we can see here. Here is market open on Thursday. We put in this SMT of highs here, which started the tumble, and then you can see 8 o'clock gave us a little bit of a pump, a little bit of a retrace, but then from there, market opened. We ripped down here, just like straight, took out the sell side, and then came up off of it. Now, every day that we have a big candle on the weekly time frame, my bias is always that 20 to 30% of that weekly range, and that usually gets hit in the morning. And so, because of that, um, I am not, I was not looking to play short. Now, it's possible that going into the future, I should kind of do like I trade at all-time highs, is trade with the direction unless it tells you otherwise, right? So if we're playing bearish and it's Friday and we've had a bearish week, continue to play bearish unless price tells you and gives you some sort of sign that it will indeed not continue to play bearish. So food for thought. I'll be looking at that this weekend. But other than that, not much on the hourly time frame. A bunch of inefficiencies left behind, none of them used. Down to the 15-minute, we can see here that SMT was up here. Not sure why it is not on this time frame. There we go. Here we go. SMT up there, pushing us down. Here's that 8 o'clock bullish candle, which was really just consolidation. And the market opened, ripped down. This was planned to be a 15-minute inverse, but was actually a regular 15-minute bearish. My draws, as you can see, were these relative equal highs here. I thought we'd come down, take out this low, doodle some, and then come up here. But that didn't end up happening, and that's okay. Other than that, 15-minute didn't give us much. We came down, took out this sell side liquidity, perfectly tapped constant encroachment of this daily wick. We pulled up back to the daily. Boom, constant encroachment of that wick extended forwards down to the 15-minute time frame. Almost perfectly hits it. So this, in my mind, was the time to play bulls, right? Constant encroachment, sell side liquidity taken. I believe there was an SMT at this point too, maybe a higher time from SMT. Maybe of this low. I think it was an SMT of this low. So higher time from SMT, constant encroachment as a zone to stop playing bullish, sweep liquidity. I liked it. Very, very shallow sweep heading into the macro. I was looking to play bullish here. But as you can see, we kind of stuck around this 5 minute for a decent amount of time and then continued to play bearish from there, targeting this sell side, which was the draws. I'll talk about that more when I get down to the 1 minute time frame. But we took off, took at the sell side, dipped one more time, reversed during lunch, came up, 15-minute fair value gap helped us keep up once and twice. And then if we look, if we look here and grade this scale, equilibrium of that move is right there, and we almost touched it. We were 1.5 handles away from it, which is pretty close. And that just shows how bullish we are that we failed to touch it. Yeah, that's all for the 15-minute. Down to the 5, we have this 5-minute fair value gap, which really kept us here a whole lot, right? Multiple reasons I wanted to play bullish here. Talk about that on the 1-minute. This 5-minute kept us here, like I mentioned, but not for long, because then we broke away from it, took out the sell side, drove down a little lower. Couldn't find what we reacted off of down here. It's possible we just stopped, but unlikely. I'm sure there's something I just missed it. But from here we came up, changing the state of delivery above this high. I believe maybe this high. In that case, it wasn't a change in the state of delivery. One of these highs. And then we retrace here. Reason we don't retrace to this one is because, boom, equilibrium perfectly right in the middle of that 15-minute fair value gap. Tap our wicks down here into the constant encroachment of the 5-minute time frame. Expand upwards once again. Here is that equilibrium, and then look where price ends up closing inside of that 15-minute. And then from there, we're just continuing to play bullish, targeting this 20 and 30% of the weekly range. 1-minute time frame, not a whole lot more. I'll talk about the trade that I was looking for. Like I mentioned, sell side liquidity swept, constant encroachment of that daily wick, SMT with this low, right? So I saw that. I saw, okay, it looks like we may be reversing. I had my eyes glued to this inverse fair value gap right here. Oops. I saw us rejected here, and so if we came up and closed, that's 100% me in long. I have liquidity, constant encroachment, higher time from SMT, 3 confluences, as well as, mind you, time ended up becoming a factor because we just spent so much time here. But I was totally ready to take this without the macro if it presented the opportunity, but it didn't. We can see here that price is nicely closing each and every time around constant encroachment of that 1-minute fair value gap. And so from there, we did end up breaking up above it, but I said, okay, it's 9:55. We have 10 o'clock news. Not a fan of this price action. We'll see what happens. And then good thing I did wait because market or news came out. Boom, gap here takes us all the way down below this low, up SMT of these highs, and continues that move bearish. Here's another time I was looking to see if price wanted to break out bullish, but it didn't. Right, we had constant encroachment of this move here, tapped right there. Nice reaction. We then have this 1-minute inverse where we reacted off of with this one, I'll call, because it's pulling it back into the range. We close above it, and then boom, immediately close below it. This isn't really that strong of a trade, and I didn't even want to take it. 1, because it's the time. 2, because we've just been in this range the whole time. But this 5-minute kept us here nicely. If you're playing bearish, this was fine. Came down, took out the sell side, ventured a little lower, reversed from there, took out all of these relative equal highs here. Changed the state of delivery at some point, well, above this high on the 1-minute. But we took out these relative equal highs, then we retraced past equilibrium, dipping our toes into this 5-minute fair value gap, right at constant encroachment. Notice how we don't close a single candle inside of it. That tells us and shows us how bullish we are on this time frame. And then from here, we expand upwards once again, taking out, well, not taking out anything. I'm sure this is some sort of gap in here that we retraced off of, but we did retrace off of it down here, failing to take out this low, failing to touch equilibrium, and then shooting up really quickly from it. Now, this is the kind of move where it's a little too fast for you to even catch anything, unless you're just bottom ticking this trade, even though there's not really any array that you're entering off of. I mean, go for it, but it's a little too fast for me to catch anything here. No inverses we can play off of. Maybe this one, if you really want to do that, but 15-minute candle closed, not even anywhere close to it. Closed here, next one opened here, dipped its toes, came out, closed here. And from there, we kind of just went 20%, 30%, and finished the day. So no SMTs, kind of really clean price action, a little too clean apart from this. And I'm okay with that, right? There's certain circumstances where bias is just wrong, right? There's many things pointing bullish here, right? Now, even though, like I said earlier, unless we have significant proof that we are going to stop playing in the direction of the week to hit that TGIF, maybe I play with the trend. But here, what did we have? Higher time from SMT. Like I've mentioned this many times. Higher time from SMT, constant encroachment on that daily time frame, and a shallow sweep of this sell side liquidity. This right there is enough to tell me, okay, we're looking to play bears. Now this 5 minute here could have told me otherwise. Boom, here down SMT these highs. I didn't really trust it. At this point, after seeing all this price action, I thought Friday might have just banged around, so I didn't really want to touch it apart from that. But yeah, it's been your market recap. Next week, I plan see where we ended up on the weekly time frame. Dipped our toes under this low on the daily time frame and then immediately came up off of it. I do believe we're going to play bullish. Look at that closure. Um, right above this high, although the fair value gap is this. Nice closure pulling off that low. I do think we're going to play bullish. So maybe we're going to see some sort of sell side price action. I wouldn't be surprised if Monday we play bullish, take out these relative highs. Tuesday we play bearish to give us that sell side wick. Um, yeah, we'll really just have to see what happens between now and market open before deciding. So this has been your market recap for November 11th, November 7th, 2025.